Let's talk more about the market. Jeffrey Small's with us, President of Arbor Financial. Thank you so much for being with us. So tell us some of your thoughts on the market right now, ahead of the election, obviously ahead of the Fed move. Some of your thoughts.
Well, we're up 22% year to date. It's been an epic year so far, a great run. Looks like we're transitioning definitely into a soft landing versus a hard landing as we see inflation start to tick up along with employment. And so I think we're in a position now where it's going to be very difficult for the Fed to keep lowering rates based on the numbers that we're looking at, Nicole. And so I think at some point, though, the market is going to have to swallow that pill because a lot of this growth has been based on what's going on with the Fed. And so if the Fed's not going to lower rates, I'd look for a pullback.
Right, understood. How concerned are you about inflation?
I'm really concerned about inflation. I think the real inflationary number is always much higher than the CPI because it doesn't include energy or medicine, and food costs. And we know what those are. And so the only way those get controlled is if we have peace on this planet, but we don't see that happening right now. And so inflation is going to be a killer with rates, which means rates are going to be higher for longer. The Fed will not lower rates if inflationary indicators and economic indicators are saying that we are really kind of stuck or we're rising again.
When we think about things that can drive this market, everybody keeps talking about the AI revolution, and a lot of your stock picks here are related to that, right? I mean, I know you have Meta, Amazon, Nvidia, Tesla. Are you a big fan of the AI revolution?
I really am. Tech is not dead. When everybody says to get out of something, then that's the time to get into it. That's kind of like a Buffettism. But the broader market prediction, Nicole, as you know, is that, we're going to see 15% earnings growth across the board next year. The other 495 unmagnificent stocks are going to increase their bottom line. We saw that last week. We saw banks and financials outperform 73% beat. And so that story is going to continue. And so, we've got a thriving economy. That soft landing technically is already here. And so how can the Fed lower rates at this time? I don't know. But why aren't the other tech stocks going to grow at 15% year over year? Of course they are. And so there's no reason not to own those at this time. And they may outperform everybody else, again, in terms of their bottom line. And so you definitely want to make that a core part of your portfolio.
Yeah. I mean, when you think about these picks like Meta, Amazon, Nvidia, Tesla, are you waiting for pullbacks on these names, or would you buy them today?
Well, I think definitely Meta's a buy today. They've taken a little bit of shot here. I think the average analyst calls 660 in 12 months on Meta. Definitely a buyer of Tesla at this stage, as well as Amazon. Their growth story is still intact, and they're slowly creeping back up toward their all-time high again. And so, they're the clear leader in the e-commerce space. They've got a ton of free cash flow. Meta's got the hugest footprint across the globe in terms of controlling the economic mode out there with 3.5 billion users. I mean, they got 75% of the internet advertising domestically here they control. And so you definitely want to own these players. They're going to keep growing year over year, 15, 20%, I think is an expected rate of growth going forward, even if we see the economy take a harder landing than the soft landing that apparently is here. But again, soft landing is not bad news for the tech companies. It is bad news if the Fed doesn't lower rates for the 40% of the Russell small cap stocks that don't even make any money, Nicole.
As we look at some of the jobs numbers and what's going on in our economy, how are you feeling about the economy?
Well, I'm feeling really good about the economy, but I feel that the market is priced to perfection to a certain degree. So you've got to be very careful at this stage. If one major tech player or one major component decided to have a bad quarter, it could trigger a sell-off. I expect at least a 3 to 5% sell-off if the Fed says, look, we're done raising rates for this year. So it's going to be interesting to see what they do next.
And then when I think about what the Fed should do and the cuts that are likely coming, there are some folks who just say the Fed should pause and stop making moves and, stay where they are. What do you think the Fed should be doing now, this year and next year?
Well, I think the Fed waited too long to not lower rates. They probably should have lowered rates earlier, but a 50 basis point cut looks like an election give, even though the economic data barely justified their state of operations. And so going forward, I think the Fed is at the same mercy that we're at. They don't have a crystal ball. They don't always get it right, but they're at the mercy of the economic data. And so, should the Fed lower rates right now in October? No, I believe they should take a pass, Nicole, to answer your question. They should not lower rates in October and reevaluate in November.
Yeah, and would you avoid anything right now in the market?
I think the entire market, since it's correlated, is really subject to what the Fed trend is going to be. And so, there's lots of things that are all-time highs. 3/4 of the market's at an all-time high, Nicole. And so, I mean, is it time to take some profits? No, but it's probably to have some defensive measures in place just in case.
All right, Jeffrey Small, thank you so much. President, Arbor Financial, great to see you. Appreciate it.